I do want to talk a little about, it's interesting because it's also a very desirable place to work. If you look at like the level of competition to get an internship there, it's known to pay extremely well for software engineering graduates. And the reason I bring that up is because you're head of AI at the company, and we live in this world where this conversation is happening right now about what do these graduates do in a world of AI.
Yeah.
Are you still hiring those interns and then converting them to full-time employees at the same rate you were in recent years?
We are still, but I think everyone has to start thinking about this future very hard. I would say that we embrace AI tooling very heavily to sort of amplify every role at the company. And our experience right now is that, these tools are, maybe a double-digit productivity boost, double-digit % productivity boost, which is great, but it's not the kind of thing that wants you to sort of change your hiring plans radically.
What percent?
Maybe like, 10, 20% type of kind of gains. And it depends heavily on the task.
Across levels?
Well, yeah, that's an interesting thing. For myself, being a bit more senior and not having as much time as I used to sort of write code directly, it's actually a pretty big boost for me because I can kind of ask something to go be programmed by Claude instead of doing it with my own hands. For people who are sort of doing deeper, low-level, coding optimization tasks, it's a sort of smaller boost for them because the tasks they're doing are so difficult, so specialized. And so, I think we sort of overall maybe average it out to that kind of 10, 20%. But the thing that really keeps us, staying very aware of the situation is I would not have said the same thing maybe 6 months ago. And that rate of change and the progress of the tooling is what really makes all our plans feel preliminary and constantly in need of reevaluation.
How do you keep an advantage ahead of others that are also using these tools increasingly?
I think you have to be an early adopter, obviously, an experimenter, giving people time and space and encouraging them to tinker with their workflows and understanding how they can do their job better with sort of AI assistance. But I think there's a bit of a paradox there where it can be quite fun to play with these tools and it can be a bit of a time sink. I certainly worked on something over last week where I felt like 2 parts of it were accelerated and 1 part was slowed down because it was maybe a little bit too hard of a tool. But I didn't want to give up because I'm having fun talking to this little AI, trying to solve a coding problem.
You mentioned Claude, Anthropic getting a lot of attention in recent months for a lot of reasons, but it does seem like over and over again when you talk to people who are using this for coding, they're saying Claude over and over again. Is that the only model you're using?
Oh, we evaluate all the sort of different providers and sort of constantly, trying to stay agnostic to the provider as much as possible. But Claude is my current, personal favorite, and that's what it sort of accelerates my workload the best.
Where do you fall? I had a nice chat with Marjorie Janowitz of Mistral AI earlier, and they announced Mistral for Finance. And it doesn't have the name recognition here in the U.S. that OpenAI and that Anthropic have. But the point that she makes is it has open weights and it's open source.
Yeah.
And that should be a selling point for financial firms. Do you agree?
I think it depends on the sort of type of AI we're talking about. So at HRT, we have sort of 2 classes of AI. One is the AI that we use to predict markets, and that's something that's proprietary to us that we develop internally. And then the sort of AI as productivity assistant, and that is something we're much more agnostic to. We'll use the best tool for the job at the right price point. At some point of usage, cost is a factor as well. So, considering all these things, right now I would say we're more in a mindset of encouraging maximal usage of the tools because the cost is small, but you could imagine a future where this is something that could be like a top level line item and sort of costs.
Ian, I want to go back to the question I asked. And when I ask about in terms of the predicting markets that you guys and you've done really well with, but I mean, as more people are playing in this universe, is it going to be harder to kind of find alpha and get an edge over as everybody's involved in it now?
Yeah, certainly. I mean, it sort of has to be that way.
Yeah.
One of the things that I think is maybe different from the past in terms of a search for alpha is how much sort of computing power you need to bring to bear to find new alpha. And so there's always something new to find in markets. And what we're seeing is that to sort of keep pushing AI in this direction, if it's like this proprietary sort of internal AI that us and our peers are developing, we need to invest massively in compute, which is no simple thing, as everyone's talking about. It can be hard to even find a data center to lease, fill it up, and
there's a cost to that.
And there's a huge cost. I mean, the sort of percentage that we're spending on this is growing steadily over time. Actually, I would say, quite rapidly. Yeah, I would. Exponentially sounds a bit, it kind of gets to the thing, but certainly very fast. And it's not just a matter of money. It's also about expertise. Like, can you find the right people to make use of these data centers. You know,
Right.
you're spending hundreds of millions of dollars on a data center. If you're getting very poor utilization out of it, that's a very expensive thing. How do you find the people, the specialized skills, and so on?
What the other thing I want to ask you about is like vertical data sets, and this is something when we're thinking about agentic AI and kind of where these things are going. And I had a conversation earlier here at Bloomberg Invest about this. What your data set is it exclusive to you guys, or like where are you getting that data?
So I would say that for firms like us that sort of play more on the shorter end of holding periods, maybe intraday days, our primary data set is still market data itself.
Okay.
Something that we, pay standard licensing agreements with the exchanges and have diligently collected over, decades. And in some sense, that is not proprietary. I mean, you have to pay for it. It's not free download on the internet, but it's not some sort of special source.
Right.
I would say for a first cut, most of the sort of the edge of these firms like ourselves is in how we use that sort of general data and how we process it. That is, and of course, how we get the decisions back out to the marketplace.
Right.
So, Iain, I'm most interested in what you said about the two different types of AI that you use. Certainly the models and the productivity element is part of it, but you said something that piqued my interest, which is the AI that you have to predict markets, and
Yes.
the proprietary tool. How good is it at doing that?
It's kind of amusingly bad in some sense.
Your job is safe?
As you might expect, predicting the price of anything tomorrow is really, really hard, right? And so these models are certainly much smarter than I am or any single human is at predicting markets, but they're not sort of, you shouldn't imagine them as being like clairvoyant. They can't like predict, say, the price of Tesla will be this tomorrow. What they can do is systematically, make better than random predictions at a massive scale on any instrument you can think of. And so that is sort of the core engine of our trading, is being able to give a better estimate, or at least our best guess, of the price of any stock, future, bond in like a minute, an hour, a day, and that is driven by an AI model of our own creation.
How do you iterate on that tool? And like how much better has it gotten in a short period of time?
It's got significantly better, but to your point about alpha, there's this sort of odd phenomenon where you can look back and say like, oh, I'm 20% better than I was, 6 months ago. But everyone else is also getting better at a similar rate. It can be very hard to reason about, after everyone else has also progressed in 6 months, where do you stand? It's a kind of constantly moving target.
Right.
And so, we have a lot of tools internally to kind of help us reason about this.
Right.
But it makes it very hard. Of course, as we were just talking about, market conditions can sort of swamp the sort of, the edge of any one market player. If you're a market maker in volatile times, you're going to do better almost independently of how smart your AI model is in that particular day, as long as it doesn't break in unusual times, which is, of course, a serious concern when things get very different from they've ever been before.
Yeah, I feel like I have a million more questions.
Okay, I want to do one more.
What?
How well?
Do we have time?
Yeah, we have time.
Oh,
how well did the market?
great.
How well did the predictor perform this week with the volatility and the Iran strikes?
Just fine. I would say one way to think about it is that a lot of the interesting things happened outside of market hours, and then once you're in market hours, things are sort of priced in roughly at the open, and there was more churn, but it's nothing that's kind of that really different than anything before. To humans, all these things seem like separate, independent events that are never quite the same.
Right.
But on a sort of more granular level, people are buying, people are selling, nothing's really breaking, and so just fine, really. This is like not something that they couldn't predict it the day before it happened, but certainly like on the day of, generally things are handling it quite all right.
Like we knew where to look for it. It doesn't feel, it's pretty amazing. And I wonder if is it because markets have gotten a little bit more efficient. Like it's amazing how stuff goes through the market pretty quickly.
It is very, very impressive. Like the diffusion of information, yeah.
Does
Right?
it use prediction markets as a signal?
No, not yet. Those markets are so thin compared to everything else. Something that we're constantly reevaluating, but right now, that sort of amount of volume that's traded on those, the moment futures open on a Sunday night, you're going to get a much better sense of what's going on than any amount of prediction market activity over the weekend. But these things have changed. Again, speaking of things changing very fast,
Right.
We've gone from nothing to like pretty interesting levels of volume in 6 months. I would not want to say definitively forever that this won't become a more important factor. Market hours keep getting longer, though, so it's a
No,
funny thing. I know.
We might be going 24/7.
24/7
We're talking about a
equities.
4-day trading day.
Yeah,
Make it a little bit longer. And
A lot of my operation people would heartily agree with you.
25/8. That's after 24/7. It's 25/8.
God, it used to be quiet in the summers too, and it's not that way anymore. Ian, this is really fun. Come back.
A pleasure. Anytime.
We love it.
Thank
Iain
you.
Dunning.